All right, we're back to talk a little bit more in honor of Tax Day today about another strategy that can help you save some taxes throughout the year, even if you're past April 15th, and that's called tax loss harvesting. Before we get too much into an example, just start with maybe defining it for everybody listening to that.
Yeah, sure. Tax loss harvesting is an investment strategy that you can use inside of an account where you intentionally look for opportunities to sell investments in there that may have losses in order to offset gains while still remaining invested in the market. I should note this is a strategy that you would only use inside of a taxable account, not like inside of an IRA account or a 401k or something like that.
Yep. So this applies really well if you have a brokerage account, a joint account with a spouse or a family member, or even trust accounts as well, which are also considered taxable accounts.
Yeah. Why don't you give us a quick example?
Yeah. So a good way to think of this: if you own $10,000 of Coca-Cola stock, and if it were to drop by 50%, normal investors should remain long-term investors and hold on to the holding. But in tax loss harvesting, you actually sell that on purpose at a loss. You immediately take the proceeds and buy Pepsi so that you remain fully invested in the market. But the point of that loss is you've now created a $5,000 loss on paper, which you can use for a couple different purposes. If you have more gains than losses, you can use that to offset some of your gains. And if you have more losses than gains in a specific year, you can carry that forward to future years to use that in the future if you can't this year. Additionally, if you can use it to offset up to $3,000 worth of regular income as well. So all are good use cases.
Yeah. So that's the basics of it. Here's the more advanced version that we do for our clients. It's called daily tax loss harvesting. How's it different from regular basic tax loss harvesting? Typically, a lot of advisors and even a lot of home gamers, they'll go through in December and they'll look for any losses in their positions.
Sort of at the end of the year.
Yeah, it's a once a year, end of the year type thing, and that's fine. But what you just missed, like for instance, we just came through a significant market downturn, which we've now pretty much rebounded from. If you're only looking in December, you just missed this last month's worth of opportunity to realize losses that can be used to offset gains later. So daily tax loss harvesting is the same strategy, but instead of reviewing it only once a year, you review and you look for those opportunities every day that the market is open. And
that's important because studies from one of our custodians have shown that it adds more than a 1% additional rate of return by tax loss harvesting on a daily basis, and often systems help us with that. So it's important to take those into account or find some that work well for you, but they can be significantly additive to the returns on your portfolio. And then also for those of you who are doing this at home or on your own, watch out for wash sales. And just a quick definition of what a wash sale is: if you sell a position at a loss and then buy either the same or substantially similar holding within 30 days or less, it actually eliminates the taxable loss that you just created for yourself. So you have to wait at least 31 days to re-enter the same position or a substantially similar one. But tax loss harvesting in general is a great strategy. It's to augment. You should not sell and stay out of your investments.
Right.
But it does help you significantly to add return over time, and that compounded return can really add to gains.
This would be a difficult strategy for a home gamer to do, just because one, you're going to have to look at the portfolio pretty much every day or very often and avoid wash sales. There's a couple other things in there that we're not, in the interest of time, we're not going into. But we and the managers we work with have that capability. We also have the capability to actually generate a report for you to show you exactly what the contribution of daily tax loss harvesting was to your returns for any given year.
Absolutely.
So it's a pretty powerful strategy and one that we use with many of our clients.
And if you have questions on this or any other related topic, feel free to contact us and we'll be happy to discuss. And thanks for joining us for another video.
Thank you.